What is going on, YouTube? I am back after about 3 months since my last video. This video is going to be awesome. It's going to be on why and how me and my wife purchased our first primary home. Okay, this is awesome. If you remember, about a year and a half ago, 18 months or so, I posted a video saying why me and my wife decided not to buy, although we were pre qualified. And if you want to take a look at that video, the link will be in the description. I highly advise you look at it if you're in the market for a home right now. I'll briefly touch on some of the reasons why we did not buy, and I'll tell you guys how we ended up purchasing this home. Okay, we didn't buy for a few different reasons. One is because the distance of the home we were looking at, we could only afford a home that was very far away. I mean, I'm talking that would add an extra hour commute everywhere we were going. I was already commuting about an hour and 20 minutes to work. It would have made it 2.5 hours. Um, to church, we were already commuting 45 minutes to an hour. It would have made it 2 hours to church. To family, friends, events and gatherings, another 2 hours. I'm talking this place was, it was 100 grand cheaper and 100 miles away. It looks like I'll say it like this: every mile away from where you want to be, just add $1,000 to it. Okay, so you get $1,000 discount on the house. 100 miles away, 100 grand cheaper. And then also financially, it still would have been a burden because I wasn't where I was financially. Our credit scores were not where they are now. And I'll say like this: all five of those factors were swept over the past 18 months. And that's all because of the Lord, following his principles, being taught in our church, being advised, giving counsel and wisdom on all these different categories of making a decision to buy. Before, as you know, about 18 months ago, I was like, buy a home no matter what. Don't rent. Make the sacrifice. Blah, blah, blah. The reason we didn't buy it, because honestly, my family would have had to suffer off of my decision, and I had to seek counsel and wisdom and understanding from some of my spiritual leaders in that category. All right. Now, the reason we bought this one, in the past 18 months, God wiped a lot of debt clean. I'll say it was the Lord because He provided the circumstances and situations that happen for allowing the debt to be wiped clean, which means my credit score at the time when we first tried to qualify was 580, 85, 585. And now at this previous time, it was 660 over the course of a year. My wife, 710, now it's 780. Okay. So our credit scores were higher. I got offered a higher paying job, about 50% increase in income. So went from the low 100s to the high 100s, off of a blessing, off of a job opportunity that happened from, man, that's a trip too, but pretty much a job opportunity. Um, Three is there was a program in the city that we're looking for that offered $100,000 down payment assistance um, in the specific cities because they want people to move. And this is not the California Dream Program. This is a different program. It's actually better than the California Dream Program because the 100 grand that they offer you, when you pay it back, when you sell your house and refinance and you pay it back, you don't have to pay anything on the equity that built in the house. With the California Dream Program, if you borrow 20% for your home, then you'd have to pay that 20% back plus 20% of the equity that you built in that home. All right, so there's down payment assistance. We didn't use that, but that was a factor in determining on where we bought. It helped us find where we are now in the house I'm sitting in now, in the office, my new office space. Um, Distance and proximity. The home we're in now, my gosh, we drive to church 2 to 3 times a week. It was an hour drive for us. I'll say 45 minutes on average. Now it's less than five. My job, I'm still an hour away. The thing is, I was, we got our home and if I was keeping the same job I had, I would have still been driving an hour and a half, maybe, maybe an hour, somewhere in that range. But now I'm still driving just an hour to work. It's like 45 minutes. I like to say an hour. And then the payments, manageable. All right, manageable. Don't get a home and go house poor. What I mean by that is this: if you get your home and you have to work 7 days a week just to pay for it and your family's expenses, it's not worth it. Yeah, you're building equity, but what are you sacrificing? Your time with your family, time in your business, time with your, spouse or whatever the case is. All those things you're sacrificing just so you can get equity. And I know at the end of the day, if I ask an old person or even older me, was it worth it or would have been worth it? I know I would say no. All right. Although our payment right now, I'll be transparent with you. Okay. The payment right now is 4 grand for this home. Um, and our rental payment we're renting out was like 2,600. So it's a lot larger, but we're able to cover it. I'm able to work just 4 days a week and make the payments work. All right. We're not living lavish. We don't have new cars. We don't have all this stuff. But we can afford to live at a moderate lifestyle, working 4 days. Okay. I still want to grow my real estate business. Still want to do all these other things. All right. But that's where we are. All right. So all those things were canceled out this past year and past 18 months, and we were given new circumstances that allowed us new ability to purchase. Okay. So let's talk about the reason we bought this home January 18th, maybe a couple days. It's actually, I think, me and my wife's born again date, I think, is January 16th, and we closed on this home on January 18th or something along those lines, down the street from our church. Phenomenal. All right. So let's go through the process of why and how and the overall decision making in purchasing this home. So, as I got my new job, as our credit scores went up, we got back in the market for a new home. We have an awesome lender that we were working with. We couldn't end up going with her because of the circumstances under the mortgage that we have, but we were working with her. Her name is Carrie. If you want her and you're in the Southern California area, she's awesome. Highly recommend her. I would use her if I had to purchase another home again. She's a lender, or an officer. And we found out that in the specific cities and areas, there was $100,000 down payment assistance program. So that directed us, and actually, that program was in our specific city of the same church that we drive to. So we're like, hey, this program is in the same area as our church. And my wife stays home, and 99% of her friends are in church. So all those who she associates with, she won't have to make this long drive just to hang out. All right. I'm not home a lot. I mean, not home as much as she is. So to me, that's a plus for her, and it didn't really matter to me as much. So that's awesome. Um, so that was one thing that made us look in the specific area, had $100,000 down payment assistance that you pay back when you sell or refinance. Or it's added as a silent second, so you don't make payments on it until the end of your first mortgage. Second was we had an increase in income, and that helped boost us up. And we actually, it's funny because there was a cutoff for the $100,000 down payment assistance. There was a cutoff. If you made more than X amount, you couldn't qualify. I made it was, let's say it was 118,500, and I made $118,000 on my W-2 the year prior. So it was like about $500 cutoff. Not saying those are exact numbers, but it was about a $500 cutoff from the cutoff of that program and how much I claimed on my W-2 taxes. Blessing. All right. So we're looking in the city, and we're like, cool, $100,000 down. We don't have to pay it back right now. We got approved at 6.5% interest, still high. But we're like, hey, if we can, the interest rate won't matter as long as we can make the home payment comfortably. I'll say it like that. The interest rate will not matter if you can comfortably make your mortgage payment. So then from there, we started looking at homes, and yeah, we were approved for 520, 6.5, 3% down with $100,000 down payment assistance. If we didn't get that assistance, it would have been like 420 pretty much. But 520. And the homes we were looking at for 520 were like, yeah, uh, you know, because of the specific areas. The areas that we liked, they were 520. But get this, your mortgage approved amount, however much you're pre-approved for, is conditional upon where your house is. So if you're approved for 520,000, I'll use me as an example. That means I have to go find a home that's 520 or less that has a 1 to 1.1% tax rate because that's normal, and no HOA because that's what they approve you based off of. Every time you add something in that equation, like an HOA or a higher tax rate in the area, that decreases your purchasing power. So the homes we wanted had an HOA of about 100 to 150. So that knocked our buying power from 520 to 500. And then they had what's called a Melrose tax. And what a Melrose tax is, it's an added tax rate. So instead of being 1.1 or 1% for your home taxes annually, you're paying for us 1.7 or 1.75. And that increase in tax rate goes to funding the city and development for the next 20 to 30 years. And after 20 to 30 years, that extra 7% on your tax will fall off. So the homes we wanted were all in Melrose because they're all new development, new communities, they're beautiful houses, nice areas, very family oriented, has parks, clean, and HOA. Some people don't like them, some people do. I don't mind it. I'm not trying to do anything too crazy. And I personally like a cleaner neighborhood, less ranchy style. Now, I wouldn't mind no HOA if it was still a clean neighborhood and, safe neighborhood as well. It doesn't matter to me. But in the areas we were looking at, the HOA neighborhoods were better, in my opinion. Okay. So our purchasing power was 520, but it got knocked down to basically 480 for the homes that we wanted because remember, the homes were selling at the same price, but they had a higher tax rate because of Melrose tax and they had HOAs. So we're looking, and we see the home that we're in now. We're like, okay, we're giving offers, we're trying to work with the agent, and nothing's working. We're giving offers, and dude, they're ending up in the toilet basically, because we're like, hey, your home's on sale for 520, but we'll give you 485. They're like, no, it's not going to work. And the reason it didn't work was this: as I'm looking at the home that we're in now, I look at Zillow, and I'm like, okay, this home was purchased here, sold here, and I find out they just bought the home in 2022. They just bought it like 2.5, 3 years ago. And the lights turn on. I realized that if they just bought it 2 to 3 years ago, they don't have that much equity in their home. And that's why they're trying to sell at this price. All right. So when that light triggered, I said, yes. And I want you guys to take note of what I'm about to say. When you get a mortgage, whatever the interest rate is, or whatever the purchase price is. Say it's $500,000 for the purchase price, and say your interest is 6%. Okay, you pay 6% interest annually on $500,000. Okay, that's your interest rate. Now, as you pay down your mortgage, that um most of your payment is going to be going to the interest because you're paying 6% on $500,000 of loan. All right. The more of the loan that you pay off, the less interest you pay and the more principal. Remember, your principal is what you actually owe. Interest is what they charge you for borrowing the money. But the more principal you pay, the more equity you build. All right. So they just bought their home 3 years ago, 2, 3 years ago, which means that in the beginning of every mortgage, most of the payments that you make will be almost 100% interest. All right. So I know one thing just from them being 2 years into their mortgage, they haven't built up a lot of principal. They haven't built up a lot of equity in their home. because most of their payments in the past few years were going to interest. Okay. Second thing I knew that now the agent, I see why she can't sell it at a lower price because the sellers are going to lose money if they sold traditionally on the market, paying two agents, the sellers and the buyers, closing costs for anything less than the 520 they had it listed for. All right. That's awesome. Now, here's my position. I am looking for a home with my wife. We have no agreement with no agents. And I did this for a purpose. The purpose I did this because I knew enough about real estate to kind of navigate my way through conversation. And then I learned a lot through the process. But I wanted to have whatever home I bought, I wanted to have the seller's agent representing me as the buyer's agent. Because when a seller's agent, the seller has their real estate agent, and I can get that same real estate agent to represent me, that benefits the agent because now they can get either double commission or they can make it easy, streamline, like, hey, I need this from you, seller, I need this from you, buyer. Okay. And if they don't get double commission, they can get regular commission and the buyer, or sorry, the seller can save money or the buyer can save money. It basically, people don't like to do it because some say it's a conflict of interest if the agent's representing the buyer and the agent's representing the seller. They say it's a conflict of interest because how can the agent be how can the agent be out for the best interest of the seller if they're representing the buyer? I don't necessarily believe that. I think that everybody can win together, but some agents refuse to do that. But for us, we didn't have an agent because I wanted to basically get the most out of whatever property I was buying. So with this agent, she was relatively new, 2 years. I looked her, I like kind of looked up her sales history and things. She sold six houses, represented six buyers, 2 years in the industry. I said, hey, um, I didn't. Say, I'm gonna scratch that, but just know I wasn't working with an agent. We saw the home. We saw the home, and we knew it was bought within 2 years. Now, knowing that it's bought within 2 years, there's this amazing transaction that you can do in real estate called assuming a loan. All right. Assuming a loan means you're taking over the loan of the homeowner that is currently the owner. So you can assume certain loans. This isn't subject to existing loan or doing any of that. You're actually getting your name on the loan, you're taking it over. So this home, I knew they didn't have equity and they bought it 2 years ago. And 2 years ago, the interest rate was lower than it is now. All right. So I was hoping for a super low interest. It wasn't that, but I got a pretty good rate. Um, you can only assume certain loans. You can assume a FHA loan and you can assume a VA loan. You cannot assume a USDA or you cannot assume a conventional loan, but you can assume FHA or VA, which means you're going to basically say, "Hey, I'm going to take over the remaining 28 years of this mortgage payment, put my name on there, and we're going to have this loan." So, um, what happened? So, where was I? So yeah, I tell the agent she didn't know about this, thankfully, but because if she knew about this, then she could have marketed this home as an assumable loan, and somebody else would have got it. It would have been sold way faster. But it was on the market for 20 days, and I was able to put the pieces together by the grace of God and get this home. So I tell the agent, "Hey, can we assume the loan? Not only can we assume the loan, can you represent us as an agent?" She does both. She says, "Yes, you can assume the loan, and I will represent you." All right. So that's already phenomenal right there. Because one thing with assumable loans, the closing costs are way cheaper. You're not working with a bunch of different mortgage officers. You're working with the bank directly. It takes a long time. It was a big hassle, but we saved a lot of money. Us and the seller saved a lot of money in closing costs. And the seller's agent represented both the seller and me, which means they saved money and we saved money. And the last thing was this. This is the phenomenal part. When we asked, can we assume the loan? I said, hey, is this a FHA or VA loan and what's the rate? She said, it's a VA loan and the rate is 5.7. Get this. FHA loan and conventional loans. If you put less than 20% down, you have to pay what's called a mortgage insurance, which is basically insuring the mortgage payment because you don't have 20% equity. That could be anywhere between $120 to $300 depending on the price of your home. VA loans have no mortgage insurance. So our home has no mortgage insurance, which means our payment's already $150 less. We probably wouldn't even be able to qualify if it did have mortgage insurance. And it has a 5.7% interest rate, which is lower than the market. Okay, so we weren't qualified for this home that we're in now. We weren't. The fact that we assumed the loan and we assumed their lending terms allowed us to qualify for the home because now we have a lower interest rate, which makes our payment about 200-300 bucks lower, and we have no mortgage insurance, which is another 150 bucks. Okay, so that is so awesome, guys. That is the story. Okay, um, if you guys want more information about this, please let me know. If you can assume a loan, I highly recommend it. Um, there are some pros and cons to assuming a loan, and maybe I'll make a separate video for that. I just want to let you guys know that we are in our home by the grace of God because everything lined up. Okay. I didn't get an FHA loan. I didn't get a conventional loan. I assumed a VA loan. And then, sorry, I didn't mention this. A VA loan is solely for veterans, but assuming a VA loan, you can be anybody as long as you meet the credit and income criteria. So that's crazy. Thank you to all the veterans who serve and protect our freedom and our nation and our principles here. Um, you guys deserve the VA loans. But for those who aren't veterans and you see a home that's on the market, you see they just bought it. If you know there's a VA loan on there, just know that you can assume that loan as a civilian that has never been enlisted in the military. All right, guys, that is the video. We're honored, we're blessed, we're happy to be in our home. There's many more videos to come after this regarding the business, but I just want to let you guys know that we purchased our home and those are the reasons why. Okay, I hope you guys enjoyed. I can't wait to hear about your stories. You're gonna be successful. You're gonna be in higher places, and I know that's a fact. Okay, stay tuned with me, and I'll stay tuned with you. If you have any questions, concerns, or comments, leave it in the comment. Okay. The old video of why we didn't purchase will be in the description. You guys go ahead and hit that like button, especially if you made it this far. Go ahead and hit that subscribe button, especially if you made it this far. And it'll be sorry, it'll be plenty of videos to come. And stay tuned because pretty soon we are going to hit $100,000 a month. And I want you guys to follow along for that journey. Peace.